All right, now let's go to that story. I don't know from which divide we'll look at it. That's the sale of the National Bank of Kenya. We did hear last week that AccessCorp has acquired the National Bank of Kenya. Let's get the Kenyan perspective at this time. I know back here in Nigeria, we did see some movement in the shares price of AccessCorp. Wonder if that was connected. But let's hear what the Kenyans have to say. We have joining us for this Mr. Limbo Taboy. He's an economist in Nairobi, the capital of Kenya. Mr. Taboy, good afternoon and thank you for your time.
Good afternoon, Amy.
So when we hear a private sector bank in Nigeria acquiring a National Bank of Kenya, it kind of rings a bell because, you know, when you say it's a national bank, help us to understand the dimensions and the implications of this, especially when you call a bank the National Bank of Kenya.
Well, National Bank of Kenya, it's was started in, I think, the late 60s. It was a state-owned bank, and it has been one of the few state-owned banks. And it was it became private later on, was listed on the stock exchange until it was bought by Kenya Commercial Bank in 2019, and it was delisted in 2021. So it's now 100% owned by the KCB Group.
So now it's owned by AccessCorp?
So KCB Group has shepherded it for about 5 years. They took it over kind of in some government arrangements to midwife the bank when it was in trouble. They've gone through with it for a few years. They've invested about $100 million to right the ship. But even as when they gave the Q3 results in November, the board of KCB said the bank was under review. It was the only non-performing subsidiary or underperforming subsidiary, and the decision was imminent. And it was kind of quite a surprise to get the news last week when all the banks were giving their full year 2023 results, and KCB signed a deal with Access Bank to sell National Bank of Kenya to Access Bank.
So what does this tell us about the financial landscape of Kenya?
So most of the banks who are releasing the results, they are coming off the 2-3 years after COVID, and there's quite a bit of recovery. Quite a few banks still have non-performing assets. Certain sectors were quite hit, corporate loans, manufacturing sector, and KCB as a group has diversified its business where 35% of its business comes from outside the country. And as a group, KCB has got non-performing assets. All the subsidiaries are below 10%. KCB itself is about 20%. And National Bank, despite all the moves done to sort out their balance sheet and the bad debts, they were mildly profitable for most of the years, but some court issues have caught up with them, and I think the board of KCB made a decision that it wants to invest in its performing subsidiaries and made a decision to let go of the National Bank of Kenya.
All right, so the rest of Africa has been admiring the pace at which Kenya has been going when it comes to digital banking and fintechs, and trying to accelerate financial inclusion. And it's these same banks that are doing this. Isn't it fitting into their profitability?
They're all doing well in that aspect. I think National Bank of Kenya, even though it was and is private, it still does a lot of business on behalf of the government of Kenya. They have got very strategic branches. It's quite a huge network at border points, at airports. I think most people who pay taxes through bank channels find themselves paying through National Bank of Kenya. So it has quite some good liquidity capabilities, which will now move on to the new owner when the deal is concluded.
All right, thank you so much for helping us to understand some of those implications and the details behind that sale of the National Bank of Kenya, Mr. Tabore, for your thoughts this afternoon.
Thank you, Ini. Good day.
Good afternoon.